What's going on, everybody? It's your boy Doc. It's just after 2 p.m. here in New York City. It's a nice, I don't know, 85 degrees outside. Yesterday was a little chilly. Today's a little warm, but we're not talking about the weather. What are we talking about? We're talking about the stock market. How's everybody doing today? I just wanted to do a quick little workshop, I guess, really, on the effects, technical analysis in a way we can use that along with QTA. And specifically, we're going to look at the RSI and divergence. Now, if you're in the chat here, I posted in the chat 2 charts that I give out to everyone that I work with: exaggerated divergences and regular divergences. There's hidden and regular within them. If you're not familiar with divergences, it's basically when the RSI, which is this indicator right here, makes a different type of move than what we see here. So if we're looking at the SPY, right, we came down and we're looking just at the valleys right now. Let's just focus on the valleys. The valleys being these parts right here, these little V's. So we have a bottom here, a V, and another V here. And we look down and see how that goes. We have a bottom here and a bottom here. So we have a lower valley, so a lowering price action and a lowering RSI. This is not divergence. This is convergence, right? So it's not telling us anything. But if we look at, what had a good one? I think Tesla. All right, let's see. No. There's, okay, here. Coherus? Yeah, this is a small biomedical stock. This isn't one that we're going to be applying QTA tools, but just will show you a good example of divergence. We have the lowering price action here, and then the rising price action. This is potential bullish divergence in the making. And you can just use the chart that I posted there, and you can match it up and see which one they match up with. And right there, it's bullish divergence. If we're just playing along just with the divergences, we can expect to see a bullish action. But that's not the only information you look at. This is one piece of the puzzle to find out potential price action. We then overlay other data. Say in this particular case, we have a pattern. It's a wedge pointed downward. So this is potential bullish action. That's 2 points of data. We see that it's finding support. That's another piece of data. And then we can just overlay other things. We get into that. But the idea that we want to focus on is just how we can apply RSI to get another inkling of potential direction. I think it was NVIDIA. Man. No, I think it was Tesla. Right. Sorry. Tesla. I think it was on the 4-hour. No. Anyway, we'll find it later. But the charts really wanted to get out to you guys because you can use this. I have mine behind the wall of my my monitors up there, and I just glance over once in a while because instead of trying to remember it all, it's just there. And you want to look also on the peaks. We'll pull up the Coherus that we were just talking about. The peaks. So you have the peaks here on the tops. So you have a peak and then a lower peak. So that's a lowering price action. In this case, it's having a straight. The RSI is a straight. See, it's at the same level here. And then you walk over to, in case, let's see if I can pull this up. Yeah. Get there. This is what you're going to be looking at here. So now we have the flat RSI, and a lowering price action, not a lowering price action. So this doesn't work out to be bearish, and it doesn't work out to be bullish. This is a non-data event, I guess you want to call it event or situation. But this is, it's just something to keep in mind when you're looking at price action. RSI works really well with QTA. It's a QTA approved indicator, as Brian would say. And we want all the data we want. A lot of people say, well, I don't use indicators. I just use the price action. That's cool. But in my book, in my understanding, if we have data available, why not use it? Why not check? If you have gauges, use them. Like you have a pilot that says, I don't need gauges. I can just fly by the seat of my pants. Okay. But if we have gauges, why not, take a look at them? There was one, speaking of which, was it Oh man, I can't remember. Someone brought it up this morning, and this is why I wanted to do the bonus one. But I really wanted to finish up talking about Nvidia, because yesterday we talked about how Nvidia going to possibly higher. I don't want to call out a number just yet, but somewhere higher above just 125 is the next target. Really, I'm going to call out a number. We have this bull pole, a bull flag, an extensive bull flag. You can actually just erase that from a bull flag and just call it a retest of support. Resistance, break, come back, retest much later. And now a play out or execution of this potential trade theory, I guess you'd call it. And we want to give ourselves some time. You know, it's the first instinct is always to go to the Friday, right? When we first start trading, we just want to, make the sprint. You know, I want to get in, want to get out, and what's the easiest way to do that? I would look for 0 DTE or the Friday expirations, the closest one. Try and maybe get into the habit of going a little further out. Instead of going this Friday, go next Friday. And then say instead of 2 Fridays, go 3 Fridays. Give yourself some more time. It's more of a cushion. So if you have a 4-point move on Nvidia and you have this Friday expiration, you're going to get killed. If we pick the wrong direction and have a 4-point move, we get killed. But if that 4-point move and we have a 2 weeks out expiration, it's a little softer, right? We can play the same direction, but we don't have to play such a crunch time, 2-minute drill. Excuse me. So what we're going to look for is Nvidia to start making new supports, right? We broke this line here. This was 111, and I think 116 we mentioned yesterday. I moved this up as a demonstration earlier. Let me move it back to 116. 116 was right around here. And it makes sense here. We have a touch here. We busted through, kind of tapped it overnight, but just broke right through here. So we broke it, and now it looks like we're trying to hold it. A hold of 116 would be good because we ran up a lot, right? In the last week or so, we ran up. Almost, was that 20 points, 19 points. So we want to have a little bit of consolidation. But if we're bullish, we don't want to have too much. So if this support fails, we're still okay because we're still in this trend up, right? We're still in this upward trend. As long as we keep making new higher lows and stay within the trajectory that we have, we'll be okay. Look at the indicators here. The MACD's kind of topping off. Our side kind of got a little hot around the 75 area. That could come down, but we don't want it to come down too much. We want to stay. The Alamo for me would be like 108 or even a little more conservative, 111. We start breaking this level. We start thinking, okay, this is the trend we need to hold. This was a support earlier. We don't need that anymore. We did double bounce off that. But you see this trajectory here. We can even put it in like this. A little something. Play around with it a little bit and see what fits. All right, now that should be pretty clear. This is the trajectory going up, and it works out good. If you zoom out a little bit, it makes sense, right? We come up, we come down, we test, we go back up again, and then we test this. We want to retest this resistance line at 140 eventually. It might not be a straight shot in this channel. We might come up, dance around, consolidate, then go up, but the idea is to revisit this 140, and we'll get a nice cup out of it, and then possibly a handle to go even higher. NVIDIA is fun like that because it moves. It's very heavily traded, so we can get this type of information. When we pull up our QTA information, we're going to go to the GEX. We'll look at NVIDIA today and see what that holds for us. We have a high GEX at 120. Confluence. Confluence, again, is the absolute GEX, occupying the same space as the high GEX bar. Confluence is any two pieces of data, two or more pieces of data, combining to give us the same summation or same information, right? Occupying the same spot. Perfect. Confluence at 120. And what did we say? 121. I had that right up here. Why don't we move that down? Borrow this one. And that makes sense, right? 121 is the natural technical resistance. And instead of going 121, people got a little below that, 120. I think we were talking about getting a 119, right? So these are just things that you can use in addition to technical analysis, your price action, right? You can use your indicators and you use the quant trading app tools, whether it be GEX, whether it be quant chart. And let's take a look at the quant chart. Yesterday, NVIDIA was breached above 2 sigma. This is an old date. We want today's date. Broke above 2 sigma, and the intraday lines were at 2 sigma as a confluence, becoming support. Now the intraday lines are updated. We're a little higher here. We're between 116 and 120, and we're bouncing around in between there using the southern, and I call it the southern, it's not really a technical term, but just easy to disseminate between the two. The southern end, tapping on it. We have a double bounce here and a little bit of consolidation, maybe working on a triple, but it's holding nonetheless. So if this holds, we want to see this. What's that number? 120, right? So now it's all kind of coming together. We're seeing that now it's like a triple confluence. We have 120 on the intraday. We have a 121 on the technical analysis, and we have 120 on the GEX. You see what I'm saying here? Level 121, level 120, and an attraction strike at 120. As long as we hold this support, 120 is looking good. If this breaks, we look to this support. If that breaks, we look to the support of the trend. And it's all about your risk tolerance. You know, we don't, there could be a stop loss at 116. There could be a stop loss at 111. It's all up to you. It's all about how much pain you're willing to take. And if you didn't put all your eggs in one basket, in other words, if you were planning to have 10 contracts and you were going, you're scaling in, so maybe even yesterday you got about 4 total, you still have 6 left. So you can add them instead of cutting your contracts when you get to this level. You can add more, lower your average to get a better gain going higher. Scaling it is a really good technique. If you're not using it, consider using it. Try it out in paper trade. Everything we talk about should be paper trading, right? Something to think about. There was one thing I did want to cover, and that had to do with SPY, right? SPY has an amazing, I would say, almost a year now, right? Going into like the end of 2023 into 2024. Amazing. But we have to kind of correct ourselves, right? We came up, corrected, came up, corrected. And I just want to point out this line right here. This line is the previous. This is the previous measurement, right? This line, this run up. We have a consolidation, and we move the previous line to the new one, and we get all the way up here. We kind of fizzled out 3/4 of the way up. Now this line I work with just more or less for the trajectory, not so much the distance of it, right? It's a good idea or good path to see what's going on here. But now what we can do is we can shutter this one to here and use that, and that gets us to the target, right? That gets us to this line. Does everyone see how I did that? This was the original run up. One more time for the people in the back. This was the length of the original run up. If we move this to here, we get that distance. And if we measure this distance, we take that into consideration, and then we add it to the rejection here, we get that same amount. Almost, right? So this is still in the path of bullish territory. Everyone was calling for a market crash, and we have a couple weeks in a row of a red, but a couple weeks in a row of being red is okay, or even a week and a half, when we had months at a time of just straight run. So corrections are good. It's not the end of the world. It's actually healthy to go higher. We can't have our foot on the gas the whole time. We have to take off and shift our gears a little bit. So keep in mind that when a market starts to correct, it's not necessarily a crash. It's just, a little bit of shuffling, and that's why you got to stay on your toes and be able to go with the punches. If you're in this long term, that's great. This is part of SPY's action. This might be an opportunity to buy more shares if you're into buying and holding shares. If this was an options or maybe like a 2-week options window, you might have been worried a little bit, very fair point to start worrying if you ever had a 2-week out and you start crashing half the week into the next week. You have to have your finger on the trigger, on the button, so to speak. You know, get rid of that line. I'm tired of looking at it. But that's how we find entries. We find something on technical analysis that kind of makes sense, and then we overlay it with the other data. The bullish divergence charts are a really handy tool when you're seeing a pattern happen over and over and over again, and you're coming down, you just want to see a break of it, and then finally you see this break right here. So let's look at this. We'll have the RSI as a flat on the bottom, and we'll look at our chart. Flat in the bottom RSI, right there, the top left, and we have a rising price action. That's not any type of divergence that's on those charts. None. So you just cycle through and you see what fits. If this doesn't fit, you look at another one. Lowering tops, convergence, no big deal. Use the MACD for confluence to see if this matches up. We have a lowering MACD here. This is a rising price action, and that is bullish. So this is not bullish divergence, but this is. So the next thing to do is maybe we cycle down a couple time frames and see what's going on here. We have a lowering, we have a rising, nope, lowering, and just cycle through and see how many divergences line up. I think it was, I really thought it was Tesla. We were just talking about this morning. Oh, you know what it was? It was Victoria's Secret. That's what it was. Apologies. I really thought, here, there it is. Sorry. Victoria's Secret had really good bullish divergence going into this pop, right? We have a downward price action right here and a rising RSI right here, and this is the result. That pop, that bullish pop from 15 to 25. Almost 25. So if you're looking out for these things, it could be quite beneficial. If you're using these in addition to other data, even better, right? If we zoom out a little bit, we have this line. We're not even going to go back to see why we drew it, but we just got to respect that as a line. Maybe as resistance, we popped above it, didn't like it, it's trying to come back down. But when we look at this bullish divergence, it's not surprising that this pop happened. Granted, it was attached to a new CEO announcement, but it's funny sometimes how catalysts match up with indicators. It's almost like, how do the indicators know there was going to be a new CEO? They didn't, but when it all falls in line, it just feels nice to see that. So be on the lookout for those things, and that's how you can spot another potential move. When you see this happening, if we hear, oh, you know what, this possibly could be bullish divergence, we'd pull up the charts. We're not going to do it now, get all into the whole trade theory. That was for a private session. But you can pull in here, type in VSCO, and then get your own personalized report. This is the advanced GEX. This is covered in another video. But this is where you come to build your own personalized GEX report. And you know what? Since we're on it, let's just... If you're going to get wet, you might as well go swimming. So this is where you can come to put in almost any ticker that has an options table. The less of an options table, the less information you're going to have. But just for kicks and giggles, I want to pull this up. This is every expiration that Victoria's Secret has on its options table. All the data that we have. This was the highest GEX, 20. We've reached it. We've surpassed it. There's no more information for us there. Call open interest is probably updated because they had a big run this morning. And anytime you have a big run, people keep looking higher. Even though if it's time to look for consolidation or a correction, people still look higher. So the call open interest are going up 24, 30. Remember, this is all the expirations. If we uncheck them all, and we'll just do the August one, remember, these are monthlies because it's a low volume traded options table. Absolute GEX was at 21. The highest GEX was at 21. We reached that. We surpassed that. And now we're working on 22. There's no reason for us to go any higher here. There's no draw. There's no action. Just double check. There's 25 is a call open interest spike. But there's this lull in here. This is like no man's land. This is going to be hard to get through. And the absolute GEX. Big one right there. And then we can add the next one. And you just build a case, right? That's what we're doing. We're detectives. We're building a case. We're trying to develop a theory to hand over to the DA so they can make a case against it. We're just clue hunting. Not much action here. This is what happens when you have a low volume options market, right? Monthly, not even every month, right? Not a lot of open interest, not a lot of volume, not a lot of data. Makes perfect sense, right? So if someone's saying, oh, why doesn't QTA have my ticker? I don't understand. Because check to see if your ticker has an options table. And if it does, and it looks something like this, like Victoria's Secret, okay, this is good. Few thousand. This is a lot, usually a little lower. But look at the volume, right? It's pennies. Trump change, I'll tell you. So you want to have something like NVIDIA, just for comparison. See NVIDIA's numbers, look at the open interest. 5 digits, right? You can even probably get close to 6. There's 90 right there. And look at the volume. 6 digits. This is a healthy options market. This is going to have a lot of data on the GEX, the advanced GEX world here. And if we get what we're going for, I think it was, what was that far out date? Oh, the 28th, my birthday. Great. So, I can't believe I forgot that. We were going to go to the 30th. The first 3. This is for NVIDIA, right? Yeah. And we'll see if anything's changed from yesterday. Okay, 120. Still the absolute GEX and the highest GEX bar. And we'll see if there's another secondary absolute GEX on the rise. Not so much, 115. Coal open interest, that should line up perfectly right there with 120. Nice. And the call volume, this is going to be interesting because the call volume can sometimes act like resistance. So if we have this resistance at 120 or 121, that would work out perfectly. If it's any lower, it's going to mess up our trade plan, right? So let's reveal it. Perfect. Right at 120, our trade plan stands on the road to 120. The whole $3 road to 120. But this was talked about yesterday when we were trying to break 111, right? So we're just we're doing maintenance now on this trade. We're not looking to execute it at all. The next trade we would probably look at is any type of resistance at 120 or 121. Once we get here, it makes sense to come back and test here, right? Just the nature of things. Up, down, up, down, up, down. So if we do reach here and we get a little bit of a rejection, my ears would perk up. We'd close the trade that we're in now, even though we have it out to the 28th. We can close that, take our profit, because we're not expecting it to go more. We're expecting it actually to retreat. And then we wait for the retreat to come down. We wait for it to find support. We, come back down right here. Let's see, like this. Somewhere up here, and we find support here. Once we find support here, this is back on to that level there. We want to retest where we got rejected. When was this? Back in last month, July. No, June. Jeez. It's been a long time. So you see that? This is on its way up to 140, even though possibly in the next few days or so, we're going to have a rejection and come back down. So when in doubt, zoom out to see the bigger picture. And we zoom in, we can see that it's finding this trend resistance here, but we want to have this support here. Support here to get to that 120. Once the 120 comes back down, possibly even going back down to 111. That's the trade theory, and that's what we're going to be maintaining. And I wanted to pop in today just to give a quick update on that theory. If you are on the fence about joining QTA, keep in mind there's a code. It's DNOW30, the letter D, NOW 30, DNOW30. Gives you 30% off your first month. And then when you do, you come into chat and you can find me. You can click on this button here, or you can ask in chat. Once you're on the gold side, you'll have access to the quant chat and gold chat. Access that for any questions on how to use these tools. Quant chat is a wonderful resource. The community in there is super helpful. And this is your gamma exposures. This is what we're looking at here. This is the feed. Every 15 minutes, we get a new snapshot, and we take it from there. All right, well, this is just wanted to be a real quick 40-minute video. I hope everyone is paper trading when we talk about this, right? Until we get it down pat, until you know and you're confident about what you're doing. You want to practice until you can't get it wrong. We don't want to practice until we just get it right. We want to practice until we can't get it wrong. So if we didn't pick the right way, we're not out a significant amount of money. We want to crawl before we walk. Even though the tendency is we want to just run. We want to dive in the deep end, right? But take it slow. Double check yourself. Like working a math problem. Work the math problem and then work it backwards to double it. Double check it. You have more confidence. And that's what QTA is. It makes good traders great. Great traders more confident. I really got to change up that line. I'm not a fan of that anymore. But it does make traders confident. We'll leave it like that. Makes traders more confident. But really, that's the long and short of it. I put those charts in chat. If you're listening to this or watching it on YouTube, go to quanttradingapp.com. Use the code DNOW30, or just hang out in public chat. You come to public. It's free. It's open to the public. That's why we call it public chat. And that's where we post graphs and charts. Sorry, excuse me. Whew, hay fever or something going on. So the idea is that we want to have a community that helps each other, but share. Share it. Ask a question. There's no dumb questions. There are no wrong questions or whatever. This is the place to do it. So thanks so much, guys, for stopping by. If you're watching this on YouTube, hit like, hit the subscribe button, hit the bell, get notified when we do this. And happy trading. Take care. Worst sign off ever, huh? I gotta work on my anti-cheesy voice, man. But I really do want to thank you guys for coming out. NVIDIA holding this line. Yeah, for sure. You want to hold this line. Once we get to 120, that's the action. Correct. Thank you, John. All right, guys. Thank you so much. I'll see you around the rooms. Peace.